And right now to talk more about the economy, we have Susan Stewart, president of Charter Financial, and Peter Clarke from Wachovia Securities. And we want to start off by saying welcome to both of you. Thank you for being here.
Thank you.
And we know the Fed is meeting today, and they could raise, they could lower, they could stand pat on interest rates. What do you think they should do? What do you think they will do? Peter?
Well, right now the futures market's actually pricing in a 25 basis point rate cut. I think there's a lot of speculation. Sometimes when the Fed injects liquidity and cuts interest rates, there's a sense that there is a greater amount of panic out there in the marketplace, and that could fuel it. I think the Fed will likely stand pat, but a couple of weeks ago we were looking at a rate increase. Now we're looking at a rate cut possibility.
Absolutely.
So the mentality of the Fed has definitely changed.
All right, Susan?
Well, I just saw an announcement at 8:15 this morning that the Fed is injecting billions of dollars of liquidity into the market. So that would be a huge thing that would really operate, bringing funds in to help hopefully tamper down some of this volatility today.
All right.
But it's
who knows?
Who knows? Yes.
I know I was like every other investor watching this over the weekend and seeing 1 minute we're talking about Fannie Mae, Freddie Mac, and then we're talking about another company, then we're talking about another company, then it's Lehman, then we're talking about somebody else, and it's AIG, and you just never know when it was going to stop. But it was about me. What about my money? Is my money safe? If I'm invested in Merrill Lynch, if I have insurance in AIG, Lehman Brothers, is my money in that account safe?
Yeah, I mean, you know, what's important for people to understand is their money in these financial institutions, if they're in investment accounts, is safe. It's protected by SIPC insurance. A lot of these protections were put in place after the Great Depression to handle circumstances exactly like this. Now, that doesn't mean you can't be reckless, and you should have no more than the FDIC limit in any particular financial institution. That's just sound investment practice.
Susan, I was looking at the news and seeing all of those people from Lehman Brothers walk out with their boxes of papers, and maybe one of those papers was your financial paper. And my investor financial advisor said people should know, is their financial advisor still operating, still in good shape if one of these companies goes bankrupt?
Well, I think that's an important thing, but you know, that's important all the time and not just now. Certainly we feel the stress and anxiety of it now, but you know, we're a society of people who really haven't dealt with things like needing to worry about FDIC insurance or needing to worry about if our broker goes under. I know years ago when I'd say to clients, you can't keep that much money in a bank account, it's uninsured, they'd sort of roll their eyes and say, well, you're just being a worrywart.
Sure, that was the Depression
that's crazy.
times,
that doesn't really matter. So I just think you have to know what you own. You have to know if your advisor's secure, and there's certainly ways to see that. And then the issue you raise, I think, is an interesting one. That's about your personal papers. I mean, there are very strict privacy laws that protect you, but, you know, it is frightening to see people walking out with boxes of personal papers and social security numbers and that kind of thing. So maybe extra diligent in looking back and paying attention now to your credit rating and things.
Where do I put my money to keep it safe?
Well, you know, the ultimate sound, safe investment and the usual flight to quality in these kind of circumstances is into Treasury bills. Treasury bills and bonds are backed by the U.S. government, and they're not tied to any financial institution. If you're looking at, you know, best rates today, you actually can look at some of the banks. If you're below the FDIC limit, banks are very hungry for deposits in this kind of environment. Banks are trying to raise capital. They're actually offering very attractive CD rates. So that's a good option to look at as well. And in every crisis, there's opportunity. If someone is looking at the long term, I think the equity market is a very appropriate place to look if you've got a 3 to 5 year time horizon. This crisis will pass, and this may represent a long-term opportunity.
There's one last comment that I heard about and then saw her again all over TV, Meredith Whitney from Oppenheim and Company, and she says that there is no light at the end of the tunnel just yet. She says the tunnel has collapsed, and she feels as if she is witnessing the biggest recession in the history of this country. She didn't sound very optimistic. Are your predictions as dire? Are we going to come out of this in 2010? As you said, cyclical, when they're down downturns, there are also opportunities. Your feelings?
I feel like you've got to buy smart and you've got to know what you own. You've got to be really careful about just dumping your money in a big mutual fund that owns hundreds of stocks, because there are always going to be good assets. And you know, I heard quoted Coco Chanel, who said, money doesn't disappear, it just changes pockets. So where is it going? And that's the challenge. Figure out next.
Last word, Peter.
Well, we know Meredith Whitney also. She's been a very bearish analyst, particularly on the financial institutions. I do think the long-term picture is a little bit more optimistic than the one she's painting. I think companies like Bank of America actually made a very sound transaction, and I think it is going to look very good in a couple of years once we get over this hump. And I think it's important to note a lot of what we're seeing today is solution. It's not the emergence of a problem. These problems were here 6 months ago. A lot of this workout, even the bankruptcy of Lehman, the injection of liquidity into AIG, this is part of a solution to the problem, not the emergence of a problem that we didn't know about.
I like ending on that optimistic note. Peter, Susan, thanks for being with us.